The letter arrived on a Tuesday. I remember because Tuesdays had always been my father's favorite day for announcements. He liked the symmetry of it, not the drama of a Monday, not the relief of a Friday. Tuesday, he always said, was the day serious people made serious decisions. I did not know, standing at the kitchen counter of my apartment with that envelope in my hand, that I was about to prove him right in a way he would spend the rest of the year trying to undo. The envelope was cream-colored, thick. It had my name on the front, Elena Marsh, printed in the kind of font that law firms use when they want to project authority before you've even broken the seal. I had been receiving a lot of envelopes like that over the prior 18 months, but this one was different. This one had a return address I recognized from childhood. The name of the firm was Callaway & Bright out of Richmond, Virginia, and they had been managing my late grandfather's estate for the better part of 3 decades. I put down my coffee. I sat down, and then I opened it. But I'm getting ahead of myself. To understand what that letter meant, you need to understand what had happened in the 8 months before it arrived. And to understand that, you need to understand my family. My grandfather, Raymond Harlan Marsh, built a modest but genuine real estate portfolio over 40 years of careful, unglamorous work. He was not a flashy man. He drove the same truck for 16 years. He ate lunch at the same diner every weekday until the diner closed. He kept records by hand in ledgers he stored in fireproof boxes in his basement. And every December 31st, he balanced those books himself at the kitchen table with a cup of black coffee and a sharpened pencil. He was the kind of man who believed that money was a tool, not a trophy. And he believed above everything in fairness. He had 2 children, my father, Douglas Marsh, and my Aunt Patricia, who had married a man named Gerald Howell and gone on to have 3 children of her own. Douglas, my father, had 3 children too. My older brother Caleb, my older sister Renata, and me. Elena, the youngest, the quiet one. The one who went into accounting instead of law or medicine, which in the Marsh family was considered a kind of polite failure. I want to be precise about that because it matters. My father never said directly that he was disappointed I had chosen to become a CPA rather than pursue something more prestigious. He didn't need to. It lived in the half-second pauses when he introduced me at family gatherings. It lived in the way he described my job to his friends. Elena does taxes, he would say, with a tone that suggested I was doing something marginally more dignified than sorting recycling. It lived in every holiday dinner, where Caleb's legal victories and Renata's medical publications were discussed at length, and my promotions were acknowledged with a brief nod and an immediate subject change. I had made peace with this, mostly. Or I had told myself I had. I had built a good life. I had a small, clean apartment in Arlington. I had a job I was genuinely excellent at. Senior forensic accountant at a mid-sized firm that specialized in estate and trust auditing. I had colleagues who respected me and clients who trusted me, and a quiet sense of professional competence that I had stopped trying to explain to people who didn't want to understand it. And then my grandfather died. Raymond Marsh passed away on a March morning peacefully in the house he had lived in for 51 years. He was 83. His death was not a surprise. He had been declining for about a year. But grief does not require surprise to be real. I had loved my grandfather with a steadiness that matched his own. He was the one person in my family who had never made me feel like an afterthought. He used to call me on Sunday evenings just to talk. He asked about my work with genuine curiosity. He understood what forensic accounting was, because he had taught himself to understand it, because I had told him it mattered to me. He died on a Thursday. The family gathered that weekend. What happened next should have been a moment of collective mourning. It was not. Within 48 hours of arriving at the family home in Richmond, my father and my Aunt Patricia had begun what I can only describe as a quiet, practiced negotiation over the estate. They spoke in the kitchen after dinner, in voices that were low but not low enough. They referenced documents I hadn't seen. They referenced conversations with the attorneys that, as far as I could tell, had happened before my grandfather was even in the ground. I sat in the living room and listened and said nothing. 3 weeks later, the estate attorney, a composed older man named William Callaway, convened a meeting at his office in downtown Richmond. Present were my father, my Aunt Patricia, my Uncle Gerald, my brother Caleb, my sister Renata, my cousins from Patricia's side, and me. The will was read, and the terms were not what any of us, or at least not what I, had expected. Raymond Marsh had divided his estate into three broad categories. The first was the family home and its surrounding property, which he left jointly to Douglas and Patricia. The second was a collection of personal effects, vehicles, and liquid savings, which he distributed among the grandchildren. The third, and this was the piece that changed everything, was a real estate holding company he had created in 2009 called Marsh Property Holdings, LLC. It owned 4 commercial rental properties across Virginia and North Carolina, producing a combined annual income, at the time of his death, of approximately $340,000 per year. He left controlling interest in Marsh Property Holdings to me, not to Douglas, not to Patricia, not to Caleb, the lawyer, or Renata, the doctor. To me, Elena, the one who did taxes. 60% of the company, with the remaining 40% split evenly between my father and my aunt, 10% each going to each of their eldest children, Caleb and my cousin Derek. The room was very quiet for approximately 4 seconds, and then it was not quiet at all. I will not pretend that what followed was dignified. It wasn't. My father's face went through a series of expressions that I had never seen on it before. Surprise, confusion, and then something harder and colder that I recognized, even in that moment, as the early architecture of resentment. Patricia asked William Calloway if there had been a drafting error. Calloway, who had clearly anticipated this question, produced a secondary document. A handwritten letter from my grandfather, signed and notarized, explaining his rationale. He wrote that he had given careful thought to who among his family had the skills and the character to steward the company responsibly. He wrote that he had watched Elena for many years and had seen in her a combination of technical expertise and moral integrity that he trusted. He wrote that he believed the properties would be in good hands, and he hoped the family would support her. He also wrote, and this sentence landed in the room like a stone dropped into still water, that he was aware some members of the family had, over the years, underestimated Elena, and that he hoped this decision would serve as a correction. My father stood up and left the room. Renata gave me a look I had never received from her before, something between bewilderment and the early stages of recalibration. Caleb said nothing, but his jaw was set in a way that told me everything. Patricia put her hand on Gerald's arm and whispered something I couldn't hear. I sat still. I kept my hands flat on the table. I thought about my grandfather in his kitchen with his ledgers and his pencil, and I thought, he knew exactly what he was doing. The months that followed were among the most exhausting of my life, and I want to be honest about that, because the story I am telling you is not a story about triumph coming easily. It is a story about what happens when you do the work that other people assume you cannot do. My father called me 3 days after the reading. His tone was civil but only just. He explained, and I use that word loosely, that there had always been an understanding within the family that the Marsh properties were eventually going to be managed jointly by the family as a unit, and that my grandfather's decision, while legally binding, was emotionally out of step with that understanding. He said he wanted to talk about a restructuring. He suggested I consider relinquishing voluntary operational control while retaining a nominal ownership stake. In other words, hand over what your grandfather gave you, keep the name, and let us run it. I told him I needed time to review the company's financials before making any decisions. He said that was reasonable. He said he looked forward to talking again soon. What I did not tell him, what I did not tell anyone, was that I had already begun reviewing the financials, and what I had begun to find was not reasonable at all. Let me explain in practical terms what it means to be a forensic accountant. It means you are trained to look at numbers not just for what they say, but for what they don't say. It means you know how to read the gap between reported income and actual deposits. It means you understand the architecture of financial concealment. Not because you are a criminal, but because your job is to find the places where the numbers are lying and explain why. When William Calloway's office sent me the company's financial records, 5 years of tax filings, bank statements, lease agreements, maintenance invoices, and management reports, I did what I always do. I printed everything. I built a timeline. I cross-referenced every line item against the property records filed with the Virginia and North Carolina county assessors. I created a spreadsheet. And then I sat down on a Saturday morning with a cup of coffee, and I started from the beginning. By Sunday afternoon, I had found the first anomaly. Between 2019 and 2022, the company's recorded maintenance expenses had averaged approximately $62,000 per year across all 4 properties. This seemed plausible on the surface. Older commercial properties require ongoing upkeep, but when I pulled the actual maintenance vendor invoices and cross-referenced them with the payments recorded in the company's checking account, a discrepancy appeared. Payments had been made to a vendor called Blue Ridge Property Services, a company I could not find registered with the Virginia State Corporation Commission, the North Carolina Secretary of State, or any other public business registry I could locate. Over 3 years, those payments totaled $114,000. I kept going. The company's management had been handled informally by my father and my Uncle Gerald since 2017, when my grandfather's health had begun to decline. There was no formal management agreement on file. Another anomaly because managing a company like this without a written agreement was either deeply sloppy or deliberately opaque. Rental income had been collected and deposited, but the deposit records showed a consistent gap between the lease stated amounts and the actual deposits, a gap that, over 3 years, totaled approximately $47,000. I sat with that number for a long time. $114,000 in payments to a non-existent vendor. $47,000 in unexplained deposit shortfalls. That was $161,000 that could not be accounted for by any record I had access to. I did not call my father. I did not call Callaway. I hired an outside CPA firm, one I had a professional relationship with but no personal connection to, and I asked them to conduct an independent review of the records. I told them to treat it as a standard estate audit. I told them to be thorough. Then I waited. During those weeks of waiting, the family's attitude toward me underwent a subtle but unmistakable shift. My father had apparently shared the contents of our phone call, his version of it, with Renata and Caleb, because both of them began calling me with unusual frequency. The calls were warm. They were curious. They asked how I was doing, how the transition was going, whether I had found the company's operations manageable. They offered to help. Caleb mentioned twice that he had experience with business restructuring. Renata mentioned that she and her husband had been thinking about investment opportunities. I understood the choreography. They were circling. I also understood something else. My grandfather had known this would happen. He had given me 60% not as a gesture of sentiment, but as a deliberate structural decision. With 60%, I controlled the company. I could make decisions without their approval. He had built the math to protect me. Thanksgiving came. I attended because I had always attended, and because I believed then, and believe now, that presence in difficult situations is more useful than absence. The dinner was at Renata's house that year. It was large and loud, and there were children running through the hallways, and the food was, as always, exceptional, because Renata was the kind of person who applied professional standards to everything she touched. My father made a toast before the meal. He thanked everyone for being there. He talked about my grandfather. He talked about family continuity and shared legacy. He looked at me once with an expression I can only describe as careful, and he said he was grateful that the family's assets were in capable hands. Capable. The word sat in my chest like a splinter. Afterward, during dishes, my Aunt Patricia came to stand beside me at the sink. She was drying glasses. She said, without preamble, that she hoped I understood the position the family was in. She said the properties had been part of the family's long-term financial planning, hers and my father's, for years. She said she hoped we could find a way to work together that honored everyone's contribution. I asked her what she meant by contribution. She paused. She said that she and my father had put years of work into managing those properties, keeping them running, handling tenant issues and maintenance calls, and all of the day-to-day responsibilities that my grandfather, in his final years, had not been able to manage himself. I said that was interesting, and that I looked forward to seeing the detailed records of that work. She looked at me for a moment, and then she put down her glass and went back to the living room. The independent audit came back in January. The firm I had hired, 3 CPAs, one of whom specialized in forensic work, had been thorough. The report ran to 68 pages, including appendices. I read it twice before I called anyone. The findings confirmed and expanded what I had found on my own. Blue Ridge Property Services was, as I suspected, not a registered business entity in any state. The principals listed on the checks, and the audit team had obtained copies of the physical checks from the company's bank through a formal records request, were a Gerald T. Howell and a D.A. Marsh. Those initials stood for Douglas Allen Marsh, my father, my uncle. They had been writing checks to a shell company they controlled and depositing the proceeds into a personal account. The deposit shortfall discrepancy was related but separate. It appeared that rental payments had sometimes been collected in cash from certain month-to-month tenants and not fully recorded. The audit could not confirm the cash diversion with absolute certainty, but the pattern was consistent and the amounts aligned. The total identified in the report, $182,400 over approximately 4 years. The report also noted something else. In 2020, my grandfather had executed a loan from Marsh Property Holdings to himself personally, a transaction that was noted in the company records as a shareholder advance. That advance had never been repaid. It totaled $38,000. My grandfather, the audit team noted carefully, had signed the paperwork for that advance during a period when his physician's records, which the firm had obtained with my authorization as majority owner, indicated he was managing moderate cognitive decline. I sat with that for a very long time. I thought about the ledgers, the fireproof boxes, the pencil, the man who believed in fairness above everything, and I thought, he did not take that money voluntarily. There are moments in a professional life when what you know and what you must do align so cleanly that the decision is not really a decision at all. It is simply the next step. I called William Calloway on a Wednesday morning. I told him I had completed my review of the company's financials and I had findings I needed to share with him. He said he could meet the following Monday. I said I would prefer sooner. We met on Friday. I brought the 68-page audit report. I brought a summary memo I had prepared myself, organized by finding with supporting documentation, tabbed and indexed. I brought a timeline. And I brought a letter I had drafted to the Virginia State Police Financial Crimes Unit and the North Carolina Attorney General's Office, which I had not yet sent, but which I intended to send by the end of the following week if we could not agree on a path forward. Calloway read the summary memo while I sat across from him. He is a man of considerable professional composure. I had observed that at the estate reading, but I watched his expression shift twice. Once when he read the section on Blue Ridge Property Services. Once when he read the section about the shareholder advance. He put the memo down. He looked at me. He said, "Elena, are you sure about this?" I told him I was. He asked what I wanted. I told him. Full restitution of the identified amounts. A formal accounting of all cash transactions during the management period. Removal of my father and uncle from any role, formal or informal, in the company's operations. A revised operating agreement reflecting my controlling interest and establishing a professional management firm to handle day-to-day operations going forward. And a signed acknowledgement from both my father and my uncle of the financial irregularities which would be held by Calloway's firm as a condition of my not referring the matter to law enforcement. Calloway was quiet for a moment. Then he said, "They're not going to take this well." I told him that wasn't my concern. It took 6 weeks. The first response from my father's attorney was dismissive. A letter suggesting that the audit's findings were methodologically flawed and that any financial irregularities were the result of informal record-keeping practices that were common in family-run businesses. It suggested that I was misinterpreting routine management activities and recommended I retain more experienced counsel before making accusations that could damage family relationships. I sent back a 17-page rebuttal prepared with the audit firm that addressed each of their objections point by point, with specific reference to Virginia Code sections on fiduciary duties, the Uniform Fraudulent Transfer Act, and the legal standards for self-dealing in closely held companies. I also sent a courtesy copy to Calloway, and I included a note that my letter to law enforcement was now drafted and would be transmitted in 10 business days absent a substantive response. The second response came much faster, and it came not from an attorney but from my father directly. He called me on a Sunday evening. He started by saying he wanted to talk. He said things had gotten out of hand. He said he had always intended to pay back the company for any amounts that were outstanding. He said the arrangement with Gerald had been informal and had never been meant to be anything more than a compensation for the time they had spent managing the properties. He said my grandfather had known about it. I let him finish. Then I said, Grandpa couldn't have known about Blue Ridge Property Services because he didn't know that company existed because you didn't tell him it existed, because you created it 18 months after he stopped being able to review the bank statements himself. Silence, I said. I'm not interested in having this conversation without attorneys present. I'm going to send you Callaway's contact information, and I'd like your attorney to reach out to him by the end of the week. If that doesn't happen, I'll proceed with the referral. He said, Elena, this is your family. I said, I know. And I ended the call. They reached out to Callaway by Thursday. The negotiation that followed was handled entirely by attorneys and was, from my perspective, almost entirely procedural. What mattered was the outcome, and the outcome, arrived at 6 weeks later and formalized in a binding settlement agreement, was this. My father and uncle agreed to repay the identified amounts to Marsh Property Holdings, $182,400, on a structured schedule over 36 months, with interest. They also agreed to a separate restitution payment of $38,000, representing the unauthorized shareholder advance. They signed the acknowledgement document. They were formally removed from any operational role in the company, and a professional property management firm based in Richmond, one with no personal connection to any member of the family, was engaged to handle day-to-day operations under my oversight. In exchange, I agreed not to refer the matter to law enforcement, provided the payment schedule was maintained. If any payment was missed, the referral would proceed automatically. The settlement was signed on a Thursday morning. I signed my copy at my desk in Arlington, and then I went out for lunch at a restaurant I had always wanted to try. And I ate alone, and I ordered a glass of wine, and I looked out the window at the street for a long time. I did not feel triumphant. I felt something quieter and harder to name. The closest word I have for it is accurate. The family found out about the settlement terms not from me, but from Caleb, who had been copied on the relevant legal communications in his capacity as a 10% shareholder. He called Renata, I assume. Renata called Patricia. Patricia, I know from subsequent events, called my father and had a conversation that was, by all reports, extremely difficult. What I did not anticipate, what I should have anticipated, given everything I already knew about the family's dynamics, was that the narrative about what had happened would not be the accurate one. The version of events that circulated through the extended family, and then through the broader Richmond social circle my parents had maintained for 30 years, was as follows. Elena had become obsessed with money after the inheritance. Elena had hired outside accountants to dig up dirt on her father. Elena had threatened her father with law enforcement over what were, essentially, paperwork errors. Elena had forced her elderly parents into a ruinous financial settlement. Elena had destroyed the family over greed. I heard this version from 3 different sources over 2 months. One was a cousin I was not particularly close to. One was a family friend who sent me an email, an actual email, telling me she hoped I would reconsider my vendetta against my father. And one was Renata, who called me on a Sunday afternoon and told me, in the careful clinical tone she used when she had rehearsed what she was going to say, that she was worried about me. She said she thought the stress of the inheritance had affected my judgment. She said she thought I should consider speaking to someone. I asked her if she had read the audit report. She said she had seen some of it. I asked if she had read the section on the Blue Ridge Property Services payments. She paused. She said she understood there were some bookkeeping issues, but she thought the legal response had been disproportionate. I said, Renata, they paid themselves $180,000 through a shell company they created specifically so Grandpa couldn't see the payments during the years when he was losing his ability to review the accounts. That's not a bookkeeping issue. Another pause. Then, I think this has gotten very complicated, Elena. I said it was always complicated. I just wasn't looking closely enough before. I ended that call too. Here's what I want to say about the months that followed. Because I think it matters, and because I think it is the part of this story that people tend to skip past when they are telling stories like this one. It was hard, not the legal part. The legal part was work, and I am good at work. What was hard was the silence. What was hard was the Sundays when no one called. What was hard was walking past a restaurant where my family used to eat together and understanding clearly and without sentimentality that those dinners were over. What was hard was the moment, somewhere around the third month, when I stopped checking my phone for messages from Renata and realized I had stopped checking not because I had given up hope, but because I had finally accepted the shape of things. I had a therapist. I had been seeing her for 2 years for reasons unrelated to any of this. And she asked me once, around that time, whether I regretted what I had done. I thought about it for a long time before I answered. And what I said was, I regret that it was necessary. I don't regret that I did it. She asked what the difference was. I said, the difference is the direction it faces. Regret about necessity looks at the situation. Regret about action looks at yourself. She wrote something down. She said she thought that was a useful distinction. The Marsh Property Holdings Company, under professional management, had a strong year. The management firm identified 2 leases that were below market rate and renegotiated them at renewal. They oversaw a deferred maintenance project at the Greensboro property that had been neglected for several years. By December, the company's net operating income had increased by roughly 12% over the prior year's reported figures. And I say reported deliberately, because the prior year's figures were, of course, incomplete for reasons that were now legally acknowledged. I received my first distribution as majority owner in November. It was not a life-changing amount of money, and the company was solid but not large. And the restitution payments were being drawn against it on schedule. But it was real. It was mine. It was the product of my grandfather's 40 years of careful, unglamorous work, and it was the product of my own decision to look at the numbers honestly, even when honesty was the harder choice. I put a portion of it into a trust. I named it the Raymond H. Marsh Education Fund. I didn't tell anyone. It was not for them. In February, almost a full year after the estate reading, something happened that I had not planned for and could not have anticipated. My grandfather had, in addition to the company he'd left me, maintained a small personal storage unit in Richmond that the estate had not yet fully inventoried. Callaway's office had been working through it, cataloging personal effects, and one of the paralegals found, in a fireproof box at the back of the unit, a set of files that did not appear in any of the estate documentation. They were ledgers. My grandfather's handwritten ledgers, from the years before he began losing his sharpness. But these were not the company ledgers, these were something else. They were personal records, kept in his small, precise handwriting, documenting conversations and observations about family members over many years. They were not a diary exactly. They were more like a CPA's notes on a family. Structured, dated, factual. Callaway sent me digital scans of the relevant pages. I read them on a Tuesday evening sitting at my kitchen table. My grandfather had started keeping these records in 2014. He wrote about my father's pattern of borrowing money informally and not tracking repayments. He wrote about Patricia's tendency to treat family assets as personal resources without distinguishing between the two. He wrote about watching both of his children become people who confused their relationship to money with their relationship to him. He wrote about worrying about what would happen to the properties when he was gone. And then, in an entry from 2017, the same year my father and uncle took over informal management of the company, he wrote about me. He wrote that he had been watching Elena for some time and believed she was the only one of his grandchildren who understood the difference between ownership and stewardship. He wrote that he had decided in consultation with Callaway to structure his estate to give her controlling interest. He wrote that he anticipated resistance from Douglas and Patricia and that he had thought carefully about whether this was fair, and had concluded that fairness was not the same as equality. He wrote in his last entry in this particular file, dated about 8 months before his death, "I trust her to do what is right with it. She will figure out what needs to be figured out. She always has." I sat at the kitchen table for a long time after reading that. I did not cry, not exactly, and I had done most of my crying in private, in the months before when no one was watching. But something in me went very still and very clear the way water goes clear when you stop stirring it. My grandfather had known. He had seen the problem coming years before it arrived, and he had chosen me not in spite of my family's dismissal, but because of what he had seen them dismiss. He had given me the one tool my family could not argue with: numbers. Not sentiment, not position, not inherited authority. Numbers. documents, records. The language they had underestimated me in turned into the instrument of accountability. I have been asked by people who know parts of this story whether I feel any desire for reconciliation, whether I have reached out to my father, whether I think the family might eventually find its way back to something resembling itself. I want to answer that honestly because I think dishonest answers to questions like this are a kind of corruption, and I have had enough of corruption. The answer is, I don't know. Not because the wounds aren't real, they are. Not because I haven't thought about it. I have at length and in detail the way I think about everything that matters to me. The answer is, I don't know because reconciliation requires more than one person's willingness, and the second person's willingness has not yet been demonstrated in any form I can verify. My father has made 2 payments on the restitution schedule without missing a deadline. This is compliance, not contrition. These are different things. I know the difference because I work with numbers every day. And one of the things that numbers teach you, if you work with them long enough, is that a transaction is not the same as a relationship. You can complete every item on a checklist and still not have done the real thing. I am not waiting for him to do the real thing. I have stopped building my calendar around other people's choices, but I am also not pretending the door is permanently closed. I am simply not in charge of whether it opens. I am in charge of what I do on my side of it, and what I do is this. I show up. I manage the company honestly. I pay people fairly. I keep the records clean. I honor my grandfather's belief that a thing worth having is worth taking care of. Renata texted me in April. It was brief. She said she had been thinking and she hoped we could talk sometime. I said that was possible and that she could call me when she was ready. She hasn't called yet. I'm not holding my breath. I am also not blocking her number. Caleb has not reached out. My Uncle Gerald has not reached out. My Aunt Patricia sent me a Christmas card, which struck me as both insufficient and kind, and I sent one back, which struck me as both unnecessary and correct. I want to talk about the house because the house is the part of this story that I think people don't immediately understand. And it matters. My father and Patricia owned the family home jointly under the terms of the will. This was a straightforward inheritance. The home was not part of the company, not part of my portion of the estate, and I had no claim on it and no interest in making one. The house was their inheritance. I had mine. What happened with the house was their own doing, and it began before the settlement was even finalized. In the years before my grandfather died, while my father and uncle were managing the company, they had also, I learned this from Callaway's review of the estate, taken out a home equity line of credit on the family home. The credit line was in both Patricia and my father's names, secured against the property they had not yet legally inherited, but which my grandfather had been gradually transferring to them as part of his estate planning. The balance on that line, at the time of the settlement, was $112,000. The payments on the restitution schedule, the money they owed back to the company, consumed a significant portion of my father's monthly financial capacity. At the same time, the informal income stream from Blue Ridge Property Services had stopped entirely, obviously, because there was no more Blue Ridge Property Services. The math of their situation deteriorated quietly but quickly. By August, Callaway informed me that he had received correspondence from my father's attorney indicating that my father and Patricia were considering listing the family home for sale, the home my grandfather had lived in for 51 years, the home where the fireproof boxes were kept in the basement, where the Sunday dinners had happened, where the diner takeout bags had accumulated on the counter for decades. That home. I felt, when Callaway told me this, the particular kind of grief that comes not from loss, but from consequence. I had not caused this outcome directly. The cause was a series of decisions my father and uncle had made over years, for reasons that I understand but cannot excuse. But the consequence was real, and it was the kind that lands on objects and places and histories that did not choose to be involved. The house was listed in September. It sold in November. I do not know where my father and Patricia moved. I did not ask, and no one told me. What I know is this. When a family builds its identity on who it believes its members to be, on which children are capable, which ones are serious, which ones matter, it builds a structure that is, by definition, as fragile as the beliefs that support it. When the beliefs turn out to be wrong, the structure doesn't adjust gracefully. It doesn't reconsider and rebuild. It defends. It attacks. It tells a different story about the person who disproved it. My family's story about me was that I was competent, but not impressive. Reliable, but not important. The one who could be trusted to handle logistics, but not trusted to make decisions. The one who did taxes. The one who could be cut from the real inheritance, handed something nominal, and would accept it quietly because she always had. My grandfather knew that story was wrong. He had known it for years. And in the final act of his careful, unglamorous life, he handed me something that was not nominal, surrounded by people who would do exactly what they had always done, so that I could do exactly what I had always been capable of doing. He handed me numbers. He handed me records. He handed me the company. And then he waited to see what I would do. The last thing I want to say is this, because I think it is the most important thing, and I want to say it directly. There is a version of this story that ends with me standing over the wreckage of my family and feeling satisfied. A version where the settlement, the house, the departure of the people who had dismissed me for decades adds up to a kind of victory. I have heard that version told about me by people who wanted to make me the villain in it. I'm not telling that version. Not because it would be unfair to me, it would, but because it would be unfair to the truth. The truth is more complicated and quieter and harder to feel good about. I did what was necessary. I did it methodically. I did it without malice, which I know sounds impossible given what I have described, but which I maintain as accurate because malice is what you feel when you want to hurt someone. And what I wanted was not to hurt anyone. What I wanted was for the numbers to be honest. What I wanted was to be the kind of person my grandfather believed I was. What I wanted was to steward something worth stewarding, and to do it in a way that he would have recognized as correct. The family that celebrated when they thought I had been cut from the significant inheritance, when they sat around my grandfather's estate reading, and watched my father walk out of the room and assumed correctly that he would find a way to restructure things. That family could not have imagined where the next 18 months would go. They could not have imagined that the quiet one, the one who did taxes, had been reading their financial records for weeks before they thought to reach out. They could not have imagined the 68-page report, the attorneys, the settlement, the schedule, the management firm, the growing annual distribution, the trust fund named for a man they had spent the last years of his life quietly defrauding. They could not have imagined it because they had never really looked at me. Not the way my grandfather had. Not with curiosity and respect and the willingness to revise what they thought they knew. They made the mistake that powerful people make when they are surrounded by people they have underestimated for too long. They assumed that the underestimated person would stay underestimated. I did not. I am the majority owner of Marsh Property Holdings, LLC. The books are clean, the properties are maintained. The restitution payments arrive on schedule. The management firm sends me quarterly reports, which I review in full at my kitchen table, with a cup of black coffee and my laptop, because I'm my grandfather's granddaughter, and that is what we do. The family home in Richmond sold to a young couple with 2 children. I drove past it once, in December on my way back through the city after a site visit to the Greensboro property. Someone had put a wreath on the door. The lights were on inside. There was a bicycle in the front yard, small, with training wheels tipped over in the grass. I sat there for a moment looking at it. Then I drove on. There is work to do, there always is, and I have always been the one who does it.